The American home is getting a makeover. Record high home prices, increased DIY activity, and a robust housing market have led to a jump in consumer spending on home improvement projects. That has helped sales at Lowe's surge.
Home improvement retailers have been among the biggest pandemic beneficiaries.
The home is multi-purpose more so than ever. It's a work from home space. It's a homeschooling space, and it's a predominant space for entertainment and recreation.
Lowe's is the world's second largest home improvement store and sells everything from power tools and kitchen cabinets to lawnmowers and barbecues. About 90% of the U.S. population lives within 20 miles of a Lowe's store. The company announced in August 2021, second quarter net sales increased 1% from a year earlier to almost $27.6 billion.
When you look at the declines last year that occurred in areas like restaurants, airlines, hotels, we think the American consumer saved $500 billion in those categories, which it was able to reallocate to categories like home improvement.
And it's not just pandemic-era housing trends that are lifting revenue at Lowe's. The company's undergone a major turnaround effort, improving stores, redesigning its website, and going after the lucrative home professional market, which includes electricians and plumbers. On top of that, U.S. homes are getting older, and many are in a state of disrepair. In 2019, about 2.7 million U.S. owner-occupied homes had either moderate or severe problems, including issues related to electrical, plumbing, pet infestations, or structural integrity. So with consumer discretionary spending shifting towards entertainment and travel, will Lowe's and its rival Home Depot be able to maintain their momentum? And what happens to the DIY home improvement market once the pandemic subsides? Lowe's traces its roots back to 1921. For almost 2 decades, farmer and businessman L.S. Lowe sold dry goods, horse supplies, and groceries out of his Wilkesboro, North Carolina hardware store. Following his death in 1940, Lowe's son Jim and son-in-law Carl Buchan took the reins of the business. But it was the end of World War II and a decision by Buchan that laid the groundwork for the future of the company. Anticipating a construction boom with the return of GIs, Lowe's pivoted to home improvement products. The company went public in October 1961 with shares trading at $12.25. By 1968, it had more than 50 stores from Arkansas to Delaware, and in 1982, sales reached $1 billion. The company was expanding in other ways too, launching Lowes.com in the mid-90s and opening its first Canadian store in 2007. But steep competition from rival Home Depot was weighing on the brand. Home Depot, the world's largest home improvement store, got its start in 1978. And according to one analyst, Lowe's struggled to compete with its rival in several metrics, including customer service, store locations, and its relationship with the pro market.
Lowe's has operated in an oligopoly in home improvement retail for 20 plus years, essentially. However, it's always been the number 2 player, been smaller than Home Depot. It has deficiencies as it relates to store locations in any given market. It oftentimes moved in after Home Depot, so didn't have the ideal locations.
I would describe Lowe's as one of the best retailers in America. However, it was still second to Home Depot, who is one of the greatest retailers in America and was and still is the largest and most profitable home improvement retailer.
Lowe's was facing other challenges as well. According to the Joint Center for Housing Studies at Harvard University, while the total dollar amount spent on DIY activity from 2005 to 2019 increased, there was an overall decline. In 2005, DIY projects made up a 24% share of the total home improvement dollars spent. By 2019, that share was down to just 17%. According to the group, older homeowners typically spend only 15% of their home improvement dollars on DIY projects. Younger owners saddled with student debt and a challenging job market were also spending less on home remodeling than 15 years ago.
Younger owners, millennials, now post-millennials, just not having maybe the interest or the inclination to do those types of projects, and maybe not having the same skill set to do a DIY project, not learning those skills from their, parents or grandparents. And I think also a time issue, just having a lot of demands on your time.
Older homes were also forcing owners to divert money away from DIY projects and towards major replacement projects like HVAC systems and window upgrades. In an effort to turn things around, in 2018, Lowe's hired Marvin Ellison as CEO.
So now, since Marvin Ellison has taken over, he's really catapulted the business forward, put it on a better footing, and made it much more competitive with Home Depot.
Lowe's operates about 2,000 home improvement and hardware stores in the US and Canada and services about 230 dealer-owned stores. The red-hot housing market has given a boost to home prices and the home improvement industry. With a backdrop of record low mortgage rates, a low inventory of homes on the market, and bidding wars breaking out among buyers, the median price of an existing home surged to a record $363,300 in June 2021.
Home values are going up. That makes homeowners more confident to go out and take out a home equity line of credit or do other home improvement, investments.
Home buyers typically spend 35% more on home improvements in the first several years after purchase, the first 3 years after purchase, compared to homeowners who've been in their homes for more than 3 years.
Aging homes in need of a lot of work have also benefited the industry. In 2019, the median owner-occupied U.S. home was 40 years old, up from 29 years in 1999. New York State homes have a median age of 60 years.
And so, right, our homes have continued to age over the last couple decades, and definitely elevating the amount of spending on especially maintenance and repairs, but also, again, replacements. There are cycles to doing those home improvement projects that, again, just need to get done at some point.
But it might have been a shift to DIY projects that have had the biggest impact at Lowe's. Between 2017 and 2019, U.S. homeowners spent $522 billion on home improvements, including $58 billion on roofing, $49.8 billion on kitchen remodels, and $49.3 billion on HVAC systems. Out of the 115 million home improvement projects started during that period, 63% were done by professionals and 37% were done by DIYers. 44% of homeowners surveyed said that during that 2-year period, they made no home improvements at all. The pandemic changed that. According to one industry report, almost 70% of respondents said that in the last month, they have started a new DIY project at home.
The increase in DIY activity, the increase in retail sales at Home Depot and Lowe's and hardware stores, for example, part of it was almost certainly a catch-up, that everyone seems to always have that list of projects that they have around the house that they would like to get done, that they've wanted to get done, and the pandemic kind of opened up that opportunity.
Home Depot, the world's largest home improvement retailer, announced in August 2021 that its second quarter sales increased 8% from a year earlier to $41.1 billion. Ace Hardware said in that same time period, its revenue increased 8% to $2.5 billion. Similarly, Lowe's announced that its second quarter 2021 net sales increased 1% from the year prior to $27.6 billion.
It's no secret that the pandemic drove stay-at-home activities across a broad array of consumer activities. But the home improvement space was one of the first to benefit and saw one of the biggest lifts of anyone in the retail world. And Lowe's was really the poster child for that, with multiple quarters of same-store sales over 30%, including a record comp of 34.2% back in 2Q of 2020.
The big box retailer had 2020 net sales of almost $89.6 billion, 24% higher than the previous year. Home decor, which includes appliances, flooring, and paint, made up 35% of revenue. Building products, which includes electrical, lighting, and lumber, made up 32% of net sales. Hard lines, which includes hardware, patio furniture, and tools, made up 31% of revenue. And the remainder was a mix of other smaller sources of revenue. The company also faced a series of additional challenges in 2020, including surging lumber prices and pandemic-related costs.
One of the headwinds that both Home Depot and Lowe's have been facing is some of the challenges with keeping their shelves stocked. There's been such high demand, and across the world, there have been a lot of supply chain disruptions.
Lowe's prices its commodities competitively with the market. And so what you tend to see is when commodity prices are going higher, this is a positive for same-store sales. It's been helping by hundreds of basis points this year. However, the company does not tend to make more money from this. They really price at a very similar level of markup.
Lowe's provided more than $900 million in COVID-related financial support in 2020 for its hourly workers. CNBC reached out to Lowe's, but they did not respond to a request for an interview. Americans pivoted to DIY projects in 2020 and 2021 in a big way. Lowe's reported first quarter 2021 same-store sales jumped nearly 26%. But will the DIY craze end once group events and overseas travel resumes? While Lowe's has warned some do-it-yourself trends could fade, the company believes it will continue to gain market share as it draws in more pro customers like contractors. Lowe's estimates its pro product market is more than $400 billion and will grow faster than the overall home improvement market. As of 2021, the company gets about 20 to 25% of its revenue from pro customers versus about 45% for Home Depot.
The essence of a home improvement business is the pro customer because they drive productivity in every department every day of the week, and Lowe's was not really focused on that. And so we pivoted and we've launched a loyalty program. We brought in products that better resonate with the pro, and we just recently announced that we're launching tool rental.
It also invested $1.7 billion to modernize its supply chain, elevated its product selection, and expanded its online business.
Lowe's is still playing catch up to Home Depot in many ways, and it's often following its playbook. So for example, it's adding loyalty programs for home professionals, things that it didn't have before. It's revamping its website. It even restructured the way that it handled prices on its website.
We went from a decade-old platform with Lowes.com, and we re-platformed the entire site to the cloud. That enabled us to have a lot more agility and functionality at a time where customers made a massive shift to e-commerce and digital purchases.
And it's not just the pro consumer that could provide a tailwind for the company. An increase in severe weather events could also push homeowners to spend more on disaster repairs. In 2020, there were $22 billion weather-related disaster events in the U.S., the most on record, and an increase from the previous high of 16 events in 2011 and 2017.
There's plenty of inclement weather activity that will potentially result in a damaged home, flooded basement, or even just a bad thunderstorm that brings through winds that rip off parts of the roof or siding.
U.S. disaster repairs rose to $26 billion in 2019, 5% higher than its historical average. According to analysts, what is likely to provide the biggest lift for Lowe's and its competitors is that we are likely to be spending a lot more time at home and redesigning our living spaces to support that.
But I think the bigger potential longer-term trend here is around consumers' focus on their homes. So even as we move past the pandemic and people, quote unquote, get back to normal, travel, et cetera, they're still very much interested in making their homes a more comfortable place to exist, entertaining in their homes, working and playing in their homes. And with those types of activities, they want to upgrade their homes. So I think that creates potentially a longer term tailwind than people realize.